Hey everyone, and welcome to my channel. This video is going to be a continuation in a series called Understanding Forex, where I explain different indicators, how to use them, how to set a stop loss, take profit, which lot size to use, and a bunch of other different Forex concepts. Today's video we're going to be going over the ATR, or the average true range. Let's get started. So what exactly is an ATR to begin with? If we're going by Investopedia's definition, an ATR measures market volatility by decomposing the entire range of whatever it is you're trading for that period. Since I'm a Forex trader, I'm going to be using Forex for this explanation. So the asset in question is Forex pairs or indices. So the ATR is a technical analysis indicator introduced by market technician J. Willis Wilder Jr. So how would you actually use an ATR? So there's usually two ways most people and most traders use ATRs. So one way it is used is used to measure volatility. So when volatility is high, ATR would be higher, and vice versa. When volatility is low, then ATR would be lower. The second case for the ATR would be for exit of trade, or to place your stop loss or take profits in whatever it is you're trading, which in my opinion is what most traders, and myself included, use the ATR for. So since the ATR is a volatile indicator, it measures the average price change within a range. Typically 14 days is standard set for most ATRs. So if you use TradingView or whichever platform you use to trade, if you go to the indicator section and click on the ATR, or average true range, it's most likely going to be set between a range of 14 days, but you can edit it to whatever date is your liking. I typically use the 14-day range because it's the standard and it's always worked for me, and I haven't had a problem with it so far. So let's go to the markets and test out the ATR. So for this example, I'm going to be using the ATR and support and resistance. So it looks like we have an entry right over here, shooting bearish star followed by another shooting bearish star followed by somewhat of the same thing. So that's 3 confirmation days. ATR says 0.079. so let's see. So 0.079 is our ATR number, so 0.079, so that would be somewhere around here is where the ATR says I should put it, but I usually like to put in it more than what the ATR says, especially when it comes to my stop loss. That way there's less likelihood of it being touched. So I'll probably put my ATR, I usually aim for 50 pips more, 30 to 50 pips more than it was recommended. So I'll probably put it over here somewhere, and then take profit, same thing, probably put it like over here somewhere. So yeah, we just this over here as SL and this over here as TP. So let's see how this plays out. And we have our move pretty much. Didn't even bother going to the SL, just went straight for the TP, which is what we like to see. Now it looks like we might have another trade on our hands. So 3 white soldiers, it's a bullish reversal signal. So we might have an entry over here. It's Monday, Tuesday, and Wednesday. So what does the ATR tell us? 0.008. So let's put that into play. So ATR says 0.08. So 0.081. So I'm probably going to put it somewhere around here. So slightly below all this right here, and then TP probably again somewhere around, maybe not that far, but yep, somewhere around here, because there's been past movements that go over there. So again, SL somewhere around here, TP somewhere around here. So let's see how this plays. So we just have consolidation from the looks of it. OB had a big spike, a big drop. Actually curious as to why. This most likely either came from news, would be my guess, but again, just back testing, so I can't really pinpoint the exact reason why, but my guess would be most likely news. But yeah, stop loss would most definitely got hit. But let's see if we can find one more trade before we end this video. And it looks like we might have an entry over here, so zoom out a bit so I can find any data on that. So right here we have a bearish hammer, bearish shooting star, and a big bearish shooting star. Right here I'm probably gonna wait for a break in this zone right here because I feel like there could be resistance. So once this breaks here, we might look for a sell. And pretty much is, oh, we got some resistance, so let's see what happens. Again resistance, and we got the break we're looking for. So oh man, I missed a lot of it. So the black crow price action, and as you can see the ATR is also moving up, which means there's a lot of volatility in this pair we're trading right now, and the ATR says 0.10, so let's put that into play. So we're selling, so 0.10. So ATR is saying stop loss around this area, but I'm most likely gonna put it somewhere a little higher, so maybe somewhere around here. And then take profit is probably gonna be somewhere around here. So SL somewhere around here, take profit somewhere around here, which looks more like a 1-for-1 play. So let's see how this plays. Okay, we have some down movement, but it looks like, and it also looks like volatility is stalled, so we might get less drastic moves like this. So let's just see how this plays out overall. And we got the trade we were looking for. So entered around here, set SL over here, set TP over here, which got hit. So that's that. So as we've seen in examples, the ATR could be used to set stop loss and take profit targets when you're trading. So in conclusion, although it might be just another indicator, the ATR has the potential to earn you more while losing less in trading. Hopefully this video has been insightful. If you're new here, don't forget to like, subscribe, share it to friends you think might need it. Leave a comment down below on any questions, thoughts, concerns, inputs, and I'll see you guys next time.